mortgage stuff, does it worry you? All right. Good afternoon, everybody. Ladies and gentlemen, welcome here to the session here. My name's Rodrigo, and I'll be here with you and with Nic Chahine, lead trader from the Benzinga Options Inner Circle chat room. That's where most of you guys already know him. I see we have a couple of members here, a couple shout outs here to some of the folks. Augustin, what's going on? Banks, Boone Hoffman in the house, Chris Cash, David Labat, what's up? Claudio, I see you there. Jim, John, all right. Tommy, Victor, Vincent. We got a very friendly, familiar crowd here, and shout out to everybody there on the YouTube and the Zoom side there. So, folks, today we're going to be talking about a couple things: trade ideas, setups, options, education, and really how pretty much Nic Chahine is able to profit from what's happening out there in the markets and different trading styles, right? So even if you're day trading options, swing trading options, or if you're doing longer dated option trades, Nic Chahine will be the guy there for you. So those are a couple topics we'll be going over today. In the chat, let me know when you guys are ready to start, so that we can go ahead and get this going. What's going on? What's going on, folks? All right. All right, looks like we're good. Anytime, David. All right, sounds good. So let's go ahead and bring on the man himself, Nic Chahine, lead trader here from the Benzinga Options Inner Circle chat room.
What's going on?
Hey, man, how are you doing?
Doing good. Catching up on some work, actually. So this is like the sit back and relax, no pressure day where I have to deliver everything throughout the day. So nice and relaxing. Happy Memorial Day, everyone in the US.
Yeah, and absolutely, man. And I see that you posted here. This is the video from Sunday, um, the one
Yeah,
with all
those
the
are
tickers.
so this usually, as you know, part of the service is I provide a 2-hour, 2.5 hour webinar free on Sunday, every Sunday. So anybody from the community that wants to review a chart, they submit a list of charts. So this weekend, I said, I'll do the work, you take the day off, give me the tickers, and they did. So I made a video as if they were there with a link to a Google Sheet that they can reference with the actual charts and comments. So I worked so that everybody else can take the day off.
Right. No, I mean that's very nice of you there, Nick. And there were several folks here that were trying, even because you do have new traders and advanced traders there, and there's a great place here that I really recommend if you are new and you do have access to the Inner Circle chat room and you do want some educational videos, check these out. They're super helpful just to get everything straight out with calls, puts, definitions, risk management. I mean, Nick, tell them all this
It's
is,
a
yeah.
good starting. Hey Marco, it's a good a springboard. So you can go down. I made a modular, so each one is its own little segment. If you don't know much, start with the very basic one and then just migrate up. But don't move past the video unless you know every term.
Risk
That
management. Yeah, I like that one. When
Yeah,
to book and
it's
stuff.
better to know the terms that are in there than to just assume you'll pick it up later. It doesn't
Right.
make sense. So they're simple, they're straightforward, they're plain simple English, they're repetitive. I repeat the same words, same process every like 3-4 times a week in videos with actual trade setups. So
Well, I mean, yeah, this is just like I would say this is the starter kit for everybody that's new or just really wants to make sure that you
yeah,
understand this properly. But more importantly, you're in the chat room Monday to Friday, live Monday to Friday
yeah.
from 8:30 a.m. to 5 p.m., answering questions, going through tickers, live trades. I mean, I was there Friday. We had a great day, obviously, but this is every day that you do it with everyone, right?
Definitely. And if you're a member of Benzinga already, what are you doing here? Go enjoy your day. No, you can, the links are right there. They're showing you. If you log into your account, it's one of the drop down menus. It's right there. It says getting started. You just right there, click on getting started. That's your game. So Daniel's asking for those. Just log into your account and go to the options section. That's my whole section. That whole thing is us. And you can just click on the getting started and you'll get everything. If not, reach out to me through the Inner Circle chat, which Rodrigo is demonstrating right now. And you can direct message me or just post in the general public section, which is pretty nice. I mean, we have hundreds of traders in there. Not one jerk. That's pretty amazing. So yeah, if you're just getting started, go watch the videos and come back to me. I urge you to come back to me with some questions, because if you don't work the system, you may miss out on a whole bunch. The chat room is open 24/7. I check it as often as I can, so I don't skip on any questions. Sometimes I get delayed a little bit by answering, but I usually don't ignore. If I ignore a question, that means I missed it. Okay, so we already have questions. What about selling short-term calls against long-term calls? Poor man's options. Paul, that is great. I hate the name. It's called a calendar or a diagonal. Who came up with this poor man covered call name? It doesn't flow. Calendar, very easy. It's called a calendar or a diagonal, whichever one you choose. I love those. In fact, Paul, I would invite you to look into, if you do trade options around the earnings, those are what you should be looking at, because if anybody here, I forbid you from buying options into the earnings week. For example, if you played Roku or whoever reported most recently, Affirm, was it? Whatever, I can't remember. Anyway, if you look at the premium you're paying for those options during the week they report earnings, you're double, if not triple paying, just for the privilege of doing it for that week. Why? Go out a week or two sometimes, or three, and you will get a bargain. And then you come back and you sell the ones against them for the week that is triple. This way, you don't even need to get the move right. You'll make money. I did it in 3 recent reports, and the call I bought didn't make money, but the call I sold lost 3 times faster than the one I bought. Therefore, I doubled my money overall. So if I bought a spread, the next day my spread doubled in value because the part that I sold just collapsed with the earnings report. So that is the way to do it. Meaning, just educate yourself, and there are simple things to not do to start winning more. So the approach that I have, I guess I can get started. Can I share the screen?
Yeah, we're all good. Yeah, we're all good to go, man. And yeah, just rip it, man. You know, it's a good day here to go.
Okay, so let me see if I can see it here. I think this would be it. Share. All right, that looks good. All right, so I'm going to start with the very beginning with risk. This is a presentation, a slide that I use in all of my presentation. People forget about the elements of risk, and there's more than one element for risk. So let's get fancy and mark it up. So if I ask somebody to give a class on risk, they always get this part right. How much can I lose? I'm managing the maximum loss. So what are the consequences? What they miss is this part, what are the odds? That's the part you manage, not this one. This one, you make the decision and you move on. You accept the risk. You took the trade, therefore you accepted the risk. There's nothing to manage. You took the risk. The part to manage is going into it, making the decision, but to quote, manage the success of the trade, this is the part you manage. Is this pink? Okay, we'll go with pink. Is it? Yeah. So this is the part you manage. The odds, because when you take a trade, whatever it is, equities, options, short, long, whatever, you assign yourself, hey, what are my odds of success? What are my odds of success? And then things happen, time passes, you find out new things. That number changes. With options, it's cool because it's one column on your options chain called the delta. So if you follow that, you can pick the number and you can just say, oh, my odds are now 70%, 30%, 60%. You have the number right away. So I can show you that in a little bit. So part of risk, however you trade, if you leave here and never look at options again, please make it part of your to-do list of how to take a position. First of all, assign yourself an appropriate size. What is inappropriate? If it's not a fundamental trade with conviction and you have supporting evidence and you take a large size trade, you're gambling. If you want to gamble, that's okay. If you want to bet on a speculative thing or event or a binary event, that's okay. Just make sure you make it of an appropriate size to where it's like a lottery ticket. You play the lotto and you don't get too disappointed if you didn't win because that's what you expect. So it doesn't break your piggy bank. It may break your heart temporarily, but make sure you survive it. You can survive it comfortably. Okay, so risk size. And then decide how you want to place your odds. If you want to buy shares, you want to buy calls, you want to sell puts, you want to sell put spreads, buy call spreads. Not every position deserves the same type of setup. So it depends on the thesis and all of that. So there's not one rule that covers every scenario, but there's one rule, the basics, how I go about doing things. They have to be the same way. So I need to know exactly what to trade, where to trade it, that's the position, when to trade it, pick your timing correctly, and manage and come back to it. I get too many questions of people coming back, hey, I have a call, it's down 90%, how can I hedge it? It's down 90%, there's nothing to hedge. The question is, can I have a miracle and bring it back? You don't hedge something that's down 90%. You take it to position, you say, how can I hedge it right away? Yeah. Or you just accept your risk and then stop out. So part of managing is to have a pain level. I'm willing to take X dollars of pain or X% of pain before I call it quits, and then call it quits when you see that pain come through. Or I'm willing to take a position until I lose, as long as it doesn't lose that level. Fall below that level, I'm out because I don't know what's below it, technically speaking. That's another scenario. So stop losses can be different ways: percentages, dollar amounts, levels, an event that passed. Hey, I took this position for the event is gone, the position is now useless. Or, hey, I hit my profit target, I should exit, or exit one part, and then I'll exit the second part here, or do something with it. So there's plenty to do, but you can't skip these things. You can't skip it. So it's important to set up the position properly. So the secret to having better success is what? I'm going to give it to you. It's very simple. It's to actually have a method. That's basically the biggest difference between home gamers and I shouldn't say that because there's some pretty successful home gamers, between successful traders and not. So somebody that has a method, that has a way, it could be wacky. If it works for them, they can do it all day. I have no issues with that. So you need a method. And the first step is defining risk the way it works for you and sticking to it and never breaking these rules. Don't ever take a position on a whim and taking the size on a whim. And in this environment, when the VIX is this high, the VIX is the fear index, the volatility index, the CBOE, the VIX. It just shows and it says or suggests that there is a lot of uncertainty, and it's correct. There is a lot of uncertainty, so we should not be all in. If you have an idea, please do not take it all in. Take half position. Why? Because we don't know what we don't know yet. We're missing something. Like Friday, really? That rally on Friday? What? No, we are missing a piece of the puzzle. So be humble. Don't take a full-size position. This leaves room to add more. Another thing I don't think you should do is add to your risk after the fact. I know a lot of professional traders, and the best ones always say, I never average down. The dollar cost averaging is a loser proposition. Let's walk through it. You think of something that's going to go up and you take a full-blown position, and then that something drops in half in price. Now you have a massive problem on your hand. What do you go and do? You double it. You just made your problem bigger on no new information. That is ridiculous. However, had you gone half in and then it drops and then you add your second half, now you're smart because you still have the same thesis. You still want the same risk. Now you deployed the full risk. So this leaves you the opportunity to enter the full position at a more reasonable cost basis. So averaging into a full-size position is okay. Averaging down from a full-size position into a bigger position is ridiculous, in my opinion. You can feel free to do it. I advise against it. Risk, the way it starts, it's always the same. Be humble for now. until you get a better handle on the VIX drops and things are more normal. And then think about how much you want to risk for that position, and think about where you want to do it. And the where applies more to options traders, because equity traders just buy it. Where in options you can choose, like somebody said, can't you protect your downside risk with long-term puts? That's the advantage of using options. I can deploy a strategy for a day, an hour, a month, or 2 years. It depends the where and at what level. So the when and the where are two big variables in options, and that's an advantage and a disadvantage if you don't know how to do it. Okay, so we've established that. Now the process goes into, okay, what do I trade? So you need something. Build a watch list. I have a watch list. I have flags in it. These are the tickers that they asked me about. So I'm going to skip out of it and go to here. This is my working watch list that I had. So I had alerts on Adobe. They fired off. I had alerts on Apple. They fired off last week. Amazon also. Baba, I think, had an earnings report. So I had a whole bunch of stocks I wanted to trade, and a lot of them already triggered. So I'm like, today what I'm doing is going through it and seeing how I can update it, move them to strategize my week. So I'm going into the week with a plan. I'm not winging it. Why these stocks in the watch list? Because people ask for them. I have thousands of members, and I sent an email saying, tell me the stocks you want to see. Boom, I get a list. I don't like to trade these. I trade the ones I trade, and I set up the trades for all of them. If some of them are not tradable, others are. So if somebody says, hey, I want to trade Ford, it's like, okay, maybe I don't want to trade Ford, but if I did want to trade Ford, this is how I would want to trade Ford. And I did share Ford trade that would have played out as well. So there are some stocks that I don't touch, like AMC. I wouldn't touch it, but I can provide setups for it. DKS, same story. DraftKings, they requested it. I said, how about Penn? I like it better. They're kind of in the same business, but one has a business, one doesn't. Chewy, I said, stick with it for the long term. SoFi. And so I do a lot of homework. And when I do homework, I come across interesting setups. So like Salesforce.com, I thought as a long-term setup, it was an unbelievable bargain down here, because this was the pandemic low. And there's no reason why a company this great should be inside a period of time when the world was shut down. So case in point, these are 3 weeks of a perfect bottom. Now it's going into earnings. So it's in the penalty box. I don't take big positions into earnings because the reaction to the earnings position, the earnings report is completely wacky. It's based on human emotions. It's not based on fundamentals. It's not based on the actual results. I know people take offense to it, but I'm going to prove it to you. I'm going to prove it to you once and for all. So this is E-Trade's options trading platform. I am not recommending it, and this is a paper trading account. So Apple, the king of stocks, right? They haven't delivered a crappy report in a long time. 1 green reaction to 7 reports. One time it was up on the report and 6 drops. If it was about quality, don't you think that this would be completely different? Yeah. You only have 1 upside move on the earnings report and 6 down on a quality company that doesn't report bad reports. So the fact that you're still hoping, I don't know why it dropped, the report was great, tells me that you're not listening. This should tell you to never, ever say these words again. The report was great. I don't know why it dropped. Nope. Just if the report was great, don't expect it to move accordingly. I'll give you another example. I wonder if we can show it here. Who is it? Hood. The last 2 reports, I think it popped on earnings, and it was crappy reports. So that one, I know for a fact, it was a hideous report, and the stock rallied 25%. So it's not about the quality. And here's one, Upstart. Upstart lost 60% of its value over an earnings report where they grew business 150%. Grew business 150%. Why? Because somebody got spooked about something in their balance sheet. That, hey, they couldn't offload as many loans as they wanted to. Ooh, sell, sell, sell. Bought the dip, doubled our money almost. Anyway, so the idea is to have a plan and stick to it. That's the second part. Most people have a plan. They just find it hard to stick to it. So a watch list is an important element of that. Don't stray into, ooh, I heard about the ticker, let's go trade it. No. Put it in your watch list. Look at it for a couple of days. That's not good to just jump in. Like, you know, pick a ticket like AR. I don't know what AR is. I've covered it many times. Okay, so I got a request this weekend on this stock. So I pushed back. I was like, what do you expect me to say? It's time to book profits or it's time to get in. There is no way on planet Earth I would touch that stock. This is what I call, it's too high to chase and too hot to short. So you have to have the gumption to just walk away from it. You missed it if you're not long. And if you are long and you haven't booked anything, you don't need to come to me if you're asking my permission, because you have different mindset than me. So I don't know this stock. I'm not going to trade this stock. I have made exceptions, but based on very specific things like Zim. Everybody knows Zim. Somewhere around here, one of our members, he's been with me for, I don't know, 8 years maybe. He brought me this and I said, you know better than for me to say, yeah, so let's go long. It's an all-time high out of the blue. And then he said they're going to pay a dividend. I was like, dividends is not my thing. And then I looked and it was $17. So I was like, this market is stupid enough to chase it. So I bought a call. I didn't know anything about the company. I broke my rules. I bought a call and I shared it and made some money on it. I bought this call right here. And then after the fact, I sold this call against it. And then I closed both things right here before the drop, before ex-dividend day. So I have made exceptions, but they were very specific scenarios, right? So if somebody suggests like AEP, I don't know who it is off the top of my head, American Electric Power. So if they said, "Ooh, I think it's going to the moon," they could present me with like unbelievable evidence. I am not about to risk money before I watch the stock for a little bit. So have a watch list and learn the stocks and the watch list should not be 100 tickers. Mine is hundreds of tickers because I deal with thousands of people. So I'm forced to look at all these tickers. So if it was up to me, I would only deal with the top 2 or 3 of every category and then occasionally stray out of it.
Yeah, Nick, and someone's asking if you also provide like education on the, like for traders that are new.
Yeah. So the other than the education page, I mentioned earlier that I did a couple of trades on earnings. Well, they were actually instructional videos. They weren't official trades because it is a coin flip. I don't want to put people in the way of coin flip. So I took advantage of the fact that most people are going to trade those. So I might as well provide some guidance. And I shared a video on Roku and it was complete. And I said, if somebody was guessing up, here's what I would do. And here's why. I explained the differential in the actual. Can anybody tell me what company is reporting this week off the top of your head? Just give me a company. There's a difference that they're not reporting this week. Just listen to the question. Asana? No, Vincent, that's not nice. I'm asking a specific question. Does Asana report? That's not a very liquid stock. Okay, they do report. So let's see if I'm proven right here. Okay, so Asana reports, right? So if I buy options here, they're going to be much more expensive than the ones in July. Now, these options are 18 days old, can be 18 days, but the ones in July are cheaper in relative terms. If you want to see it, I think this will show it. Yeah, that's not a good example. It's not a very liquid stock. So my point was in the video for Roku is if you buy the options for the current week, that is, you know what? GME reports. I can't believe nobody said that. Okay, so here we go. GME reports. And the implied volatility here, this is like how nervous the markets are for this week. They're about 180. I bet you this number will climb as the date approaches. And then if I go out to June, it's lower. And that differential was massive in Roku, like double. So these options were double the price. So I said, if anybody wants to bet on Roku and they use current week, they're making a mistake because they are, thank you for that, they are inflated. So anything I buy, put, call, it doesn't matter. I'm overpaying. I'm like desperately overpaying. So that would not be the right thing to do. The right thing to do would be go out a couple of weeks, buy whatever I want to buy here. It would be closer to its normal price. So I'm not paying a premium just because of the date. And then what do I do? If I know enough, I go here and I sell something against it. And I create one of those trades that they mentioned, the poor man's, whatever you want to call it. It's called a calendar, folks, or a diagonal. Very simple. So we're knee deep in options right now. But the concept is, if I buy something this week, it's going to be super expensive. If I buy something that expires in 2 weeks, it's going to be closer to its going rate. So if I buy it and I sell this week's against it, not blindly, you have to know your levels, then at the open, after it reports, the stuff I sold will just collapse in my favor. So that's how I was able to make money. And then I proved it by doing another educational video on Zillow earnings. And I took the other side. I said, what if I wanted to bet down? Same thing, bought a put out in time, sold a put current week, and that doubled. And then we repeated the process, I think in a firm, I can't remember, a couple more companies, same concept. So the education continues all the time. And if you're in the chat room and if you're in the live room, so Rodrigo showed you the chat room, and this is the chat room, and this is what people are saying in the chat room, at least one of them. This person is on the West Coast, cracks me up every day. He's like my son. My son is 20. Yes, you can. It's open to every member, the live room. He pops in at like 11 Pacific. Clearly not morning. Good morning, everyone. It's like, good morning. Okay. So this is the live room. The live room is different than the chat room. The chat room is available to you 24/7. I created it as a method of communication, two-way street between you and me. You have a question, you come to me, you direct message me, you post it in the main feed. There are no jerks in there. Every answer gets handled. Now, for somebody that has time on their hands and they can pop in during the day, they can hear me talk like this, sharing my screen like you are seeing now, and we are finding trades. So usually we have about 260 to 300 and some people on that day. Last week, we had 286. Aftermarket, we had 180 still hanging around, and helping people find faster trades or just answer questions in general. Like the question I answered here saved that person a lot of grief. They would have been assigned immediately after the market closed if they didn't know what to do. I heard them say, I saw them type something earlier, and I harped, wait, don't let it die in the money. And they finally acted with less than 2 minutes to spare. So that was good. And then you have the opportunity to ask as many questions as you want. It's going on all day, every day. Before the market opens, about half an hour, I'm in there charting and updating my charts. I usually have this chart and 3 like these, which these are multiples. We also go trying to find harmonic breakouts and fast trades, but we discuss slower trades as well. So if you want to discuss a trade from A to Z and you have time and the market is somewhat slow, I will spend as much time as it takes in order to talk to you about it. So these are snippets. Every time I see a message I like, I take a picture of it and I say, thank you, I'll be sharing it. And they go there. So we have fast trades that are 40 and 50%, and fast trades that are 10 times the money, but you just need the time that is required. So if you have time to jump in, that's great. If not, this is what you get. You get about one trade a day in full video from A to Z. Here's what the world looks like. Here's what I think this company looks like. For example, Lockheed Martin, to see when we did this, I can't remember. Okay, so somewhere in March, after this big rally, I did a thing about Lockheed Martin. I said, okay, I want to short it because it's rallied too fast. So I deployed a credit call spread, which is a bearish position. This one right there, credit call spread. And then I said, here's the reason why. I don't mind the company. I just think it rallied too far. And this is a gentle way of shorting it. This way, I don't need a drop to win. I just need it not to explode. It's an option strategy that's pretty basic when it comes to creating spreads. And then I said, if somebody does not want to sell a spread, they can buy this spread and accomplish the same thing, except for this one, you need a drop to win. Well, luckily they got it. Somebody that did both made a lot of money. Okay, so that was one part. And then later on, Lockheed Martin dropped. And I said, you know what? I didn't hate the actual stock. I just didn't like the way it moved. So now I can take the opposite side of the story and create a bullish spread, which is also called a credit put spread or a bull put spread, which was this one. And it worked because Lockheed Martin found support. So in the end, somebody could have eked out 40% almost out of nothing, not to mention those who bought the debit put spread. That's a bonus. Did exactly the same thing for gold. Now, AMD was a different strategy where somebody asked, hey, can I have a fast trade on AMD? I said, how about an iron condor? Boom. An iron condor is basically finding a range and sharing a setup. And the setups will be full videos, including a table like this or similar to this, depends on how complex it is. I'll say trade number one, credit put spread, my favorite, and I'll explain it. Where I would stop out, I don't need a rally to win, potential yield, 85%, 84% odds of success on paper with a 14% potential yield. Boring. I love boring. Bring it. Selling a naked put for somebody that wants to own share is even better than this. It depends on the stock. I never do it in a stock I don't like. Optional credit call spread, that's if somebody wants to short this. So these two together would make an iron condor. Debit call spread, you pay something and you need a rally, and then if the rally comes, you make something like the traditional way of buying and hoping for a rally. These are usually my least favorite, but sometimes they work. In this case, I did not suggest buying a naked call. This is for Microsoft. That was a real trade, by the way, which worked out. So it was when Microsoft was at the bottom. It worked out. So when this stint of bearishness was happening the last couple of weeks, actually last 7 weeks, I said, I want to stay tactical. I want to take positions that leave room for error, that don't need a rally to win. And if somebody stuck to them, most worked out. I think the one that was most difficult was a credit put spread in Snap. So if somebody took a credit put spread in Snap, and I had mentioned the 2022 credit put spread. So in essence, I needed it to stay above 22. And if somebody didn't close it along the way and then hung on to it, and then the surprise element of, I cannot believe, what is the purpose of the CEO going out and warning everybody ahead of time? So usually if I own shares, I would want to protect myself when I think there's something going on, right? So I would wait for the earnings, and I would say close to the earnings, okay, maybe I'll buy some puts to protect my shares if I was long shares. Well, this jerk just robbed everybody of that opportunity. He blurted out the worst news possible without any warning whatsoever. Oh, you got to pre-warn. No, you don't. You don't got to pre-warn. All you did is screw everybody. You just took away the opportunity from everybody to actually buy protection during the earnings. Why don't you wait until closer to the earnings to actually tell us how bad it's going to be? This way people will be ready. Except instead, he just surprised everybody. So, however, this scenario if somebody managed it properly, they could have broken even on Friday. Convoluted way of defending a credit put spread is to resolve yourself at accepting shares at 22 and then selling the protection leg down when it was at the bottom, bringing you thousands of profits. And then when it rallies back to 15, if they assign you at 15, you'll be broken even, if I did the math correctly. If not, you'd be slightly down. So that's an acceptable level. I did this with, the last time I had to do this with was during the pandemic year with US Steel, the letter X. I sold a put, but then got nervous about it, and I bought a protective put for pennies, and then the stock collapsed from 9. I was on the hook at 9, so I sold the put at 9, and the stock fell under 5. Well, my protection was at 8, so the leg of protection from 8 to 5, I booked the profit, and then the stock rallied back slowly, and then I ended up making money on it because of it. So it's not the end of the world, but the point is we stayed tactical. And if somebody diligently sold put spreads where they were supposed to expire worthless, they mostly expired worthless in our favor. So how you trade, it's very important. We stuck to our guns. First, define risk and stick to it. Second, play with stocks you know and avoid stocks you don't. Third, make sure you structure the trades in a way that suits the environment. And that's what I've been trying to do. So the education continues. The education is every video I share is like 15 minutes and it goes through all of these like somebody new. So if you're in it, if you join and you get the first video and sounds like gibberish, come back to me and say, what did you mean in that part? I listened to it and I have no idea what it says. I will set you straight on that. And then the next time you see the video, I will say almost exactly the same thing. And then you won't have that question. Maybe you'll pick up on something else. What did you mean with that part? And then a week later, you've already seen 3 or 4 lessons that are 20 minutes each, 15 to 20 minutes each. How long do you think before you nail this stuff? After a year's worth of every week, 2 or 3 or 4 of these, and every day, the opportunity to discuss those live and the opportunity to trade live. So if you're a fast trader, the action in here is incredibly exciting. It's too fast for my blood because I'm actually helping everybody, but people who can trade fast, relatively fast, are making the killing. I miss most of them because I'm too busy and I would make a mistake, but they're available. There are people sharing their own trades in there. Like if you're comfortable with your trade setup, boom, you share it. Nobody here says, "Ooh, I just made 1,000%," unless they actually shared the entry point. So there are people that share entry points. They say, "Hey, I'm long this, I'm short that, I'm long this, and I'm short that," and why?
Right. Really quick here, Nick. I'm getting a lot of emails here from the folks on the session. So questions about the chat room here. So I'm just going to knock it out really quick while we're all here, and then we'll get back here to the session.
Go ahead.
Yeah. Good question here, folks. So are the sessions on Sundays recorded? Yeah. So all the sessions that Nick does on Sundays are going to be posted in the chat room for you guys. Does everybody that joined get a free laptop? Yes. That is, if you see a laptop in the checkout, that means that we still have laptops. Is this for new traders or just for advanced traders? So we have a mix of both. We have advanced traders and we have new traders. They help each other out. It's a great community. And you have Nick there who's also helping there, so you do have that there. Does Nick trade over, give earnings, Fed, special event trades all the time? All the time. Chat room schedule, 8:30 a.m. Eastern till 5 p.m. Eastern. And there is a session on Sundays for the members from 10 a.m. Eastern till 12 noon. Is there a money back guarantee? Yes, there is a 7-day money back guarantee. If you guys do want to try it out, feel free. There is a 7-day money back guarantee for this. And the price at renewal, that will be the same as today. So if you sign up today with 70% off, you keep the 70% off till next year and you renew at the same price. And unless you want to add anything else there, Nick, to the chat room schedule or the format.
It is casual and very effective. As far as being new, don't be shy. I'm a pretty good teacher. I enjoy teaching. So if you ask me to describe my service, it's a place to learn. It's not a trade alert service. If you join and the first thing you're going to say, where are the trades? I'll be like disappointed because the idea is for me to teach you how to do things that suit you. I can't teach you everything I do. I wouldn't want to, because not everything is appropriate to everybody. There are ways to trade that are not appropriate for me, so I don't do them, but I know about them. And there are ways that are not appropriate to you that I do that you shouldn't attempt. So the trick is to find something that suits your style, your personality, your schedule. Like, for example, if I share a fast trade, like an iron condor that has a day on the clock or 2 days on the clock, like a short-term iron condor or a credit put spread or credit call spread, and you can't babysit your trades, you shouldn't take it because it might require babysitting. So even though by design they're supposed to win 90% of the time, you've seen these headlines. It's crazy. The Friday rally went well above the expectations, and like that last burst, I bet against it 40 cents. I knew it was a gamble, and it went the other way. So it's important to know your time frame. If it was me, if I had a full-time job, I would design trades that have like 3 weeks on the clock at least, and that have some buffer zone between now and current price. This way I can go to work and come back and check on my portfolio and not have to say, oh my gosh, now I have a problem on my hand. So those are the best trades, especially if they were well balanced. And here's another thing, balance. You should have balance in your, when I said have a watch list, please make sure that your portfolio is not one-sided. I've met too many people that have said, I'm down 60% or 80% from last year. And then they tell me what they're long. And it sounds like they're all the same stock. If your stock sounds like something that ARK Invest wants, and that's all you've got, that's why I hate that company mentality. If you go to their website, I commend her for talking her book and putting her out there, although that's what Wall Street is doing. They're going after her book. They know somebody is a lame duck, they go after her. But the mentality on the website, the first page on their ARK Invest website, it says, we solely invest in, and before you finish, have you ever heard any money management class say, put all your eggs in one basket? No, nobody says that, right? So here she is saying, we solely invest in. So they put all their eggs in one basket. And then they say what that basket is. And then that's where the jaw drops. Innovation, which means new things that are not established that may be home runs or flops. So they put all their eggs into a very risky basket. You make great money on the way up, and you lose it all on the way down. And that's exactly what happened into the pandemic peak and then the crash thereafter. It's heartbreaking to see. And it also drags down a whole bunch of good companies with it. Like SoFi is a good company. Affirm is a good company. Clover could be a good company. It's $1 billion business, but they treat it like it's fake. So, but then you get all the junk with it, like Ride. And the company might be good. The efforts that they're doing, whatever they produce, the car, truck, I think, whatever it is, might be good. But as a stock, it's horrendous. It has no fundamentals whatsoever. So you have to know how to balance your book. So if you're long tech, make sure you're long some staples that do better during downturns, during bearish markets. So look up companies. I mean, you can literally Google what's a good bear market stock, and you'll come up with a list of 3 or 4 that are boring. Utilities might be in there, although not my favorite. Gold might be, GLD maybe. Look at the cycle of gold. So some tech and some bearish trades, and not flat out short stocks. Nobody should do that. Okay, back to definition of risk. How much can I lose? If you short stocks outright, you don't know how much you can lose. If that's the case, then you should stop right there, and that trade is unacceptable. Nobody in my family is allowed to ever short stocks outright. That includes selling naked calls. If you do that, you are putting your livelihood in jeopardy. You're saying, oh, I can handle it. Melvin Capital, I think, was an $8 billion hedge funds. Poof, because they shorted the stock. One stock broke the company. So don't assume you're stronger than somebody with $8 billion and years of practice. You're not better than them. I guarantee you're not. And they lost everything. They had to shut down the business. So shorting outright, crazy idea. You can short companies very safely. You can buy put spreads, selling a call spread. Then you go to bed, honey, I only risked $300 on this bet, and I'm short the company right here. Okay, somebody's asking, what's the difference between selling naked call and selling naked put? Outstanding question. Let's jump right into it. Class time. Okay. No problem. I'm going to approach this as if I have a lot of people that have no idea what puts are and what calls are. So let's just approach this from a very fresh perspective. Okay, now this is a trading platform. I chose Apple because everybody knows the company. I'm going to choose July. Okay, July. So what did I just do? First of all, I'm showing a set of numbers that represent options contracts. So let's start there. Options are contracts. Forget everything else you know about options. They're contracts. There's a buyer and there's a seller. So when you hear on TV, they are buying, no, they are buying and selling, the same thing. Nothing is bought if it wasn't sold, and vice versa. So there are two sides to every transaction. So they are contracts and there's a buyer and a seller. Like every contract, it has stipulations, it has rules, it has parameters. So the first one I just chose was time. I chose July. It has 46 days on the clock. You can see it right there. So I get it. I'm starting from scratch. So 46 days on the clock. And everything on this page relates to Apple shares. So we have time and what? Shares of Apple. And then the third parameter is how many shares are we talking about? Well, by definition, every contract on the options represents 100 shares. So everything here, this one, that one, this one, that one, 100 shares. Whatever the outcome is, we're dealing with 100 shares. The buyer and the seller are arguing over 100 shares. Okay, so now we come to the fork. There are two flavors of options, one called put and one called call. These are the puts on this side, calls are on that side. The puts are not bearish. The calls are not bullish. Both are both. It's what you do with them that actually makes them bullish or bearish. Okay, so let's see if we can explain it. So these are the puts here, and these are the calls. And we established the time as 46 days, and it's 100 shares. Now, the most important one of them all, a price. What is the price of that contract? And price is right here. Okay, so if I pick this contract, I'm talking about $130 Apple, 100 shares, and in this case, puts. Forget what they do. Okay, so that's one contract. And if I choose this one here, that's also Apple at 165, 100 shares, and calls. So now you get the lay of the land as to what's a put, where the puts are, where the calls are, where the parameters are. Okay. Now earlier I said in the other slide where the risk was, I said you can actually choose your level of success, right? Your odds of success. Well, in options, I'm going to make it very simple. I'm not going to find the stuff. You can go read the definition. It's junk. You can't use it. I'm going to give you how to use it. This right here, the column called delta, is your odds maker. You can read the definition. It's pretty ridiculous. You read the definition, you have no idea what to do with it. But the way I tell you about it, it's your odds maker. For example, what is price? $150 at the time this closed. So this is current price right there. The delta is 0.5. What else do you know that is 0.5? 50-50, the coin flip, right? So if you buy shares of Apple right here, right now, you have just as much odds as the person selling you those shares at being right. The price can rise, price can fall. So it's 50-50. It's an equal footing. Nobody has a mathematical edge. You may have an edge in your head because you did your homework. Oh, that guy's an idiot selling me his shares because I know it's going to go blah, 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 blah. So you give yourself an edge. Mathematically, it's 50-50, right? So delta 50, 0.5. 0.5. Ignore the minus. That's the definition of the delta, gives you that minus. So let me rephrase those odds. What is this number, big or small? 0.05, 0.0449, 0.05. This is 0.5. This is 0.05, right? So this literally says there is very little, it's a small number, there is very little chance that Apple will be a 180 in 46 days. It's not impossible, but it's a tiny chance, right? See here, the chance is 50-50. 40-60, 70-30, 80-20, 90-10, very little chance, under 5% chance. You see how these are now usable data. So somebody that gets wrapped up in how you define a delta, tell them whatever, you can go do that and let me tell you how to use it. So if somebody buys a call up here and pays 30 cents for it, they're getting their money's worth, which is they're basically throwing their money away because they have very little odds that this will happen. It can happen. And if it does happen, they'll make $1 bazillion. But there is very little odds. I would rather risk more money here with much better odds here or here. So just to give you the idea. Now let's backtrack and say, okay, so what is a call? What are these things? What do they mean? So let's go with the put. If I own shares of Apple and I was worried about the next month and a half or two, and I just wanted to protect my shares, and let's say my entry point was well below 100, I've had my shares forever, I'm afraid the market is going to absolutely crash like 2008. I would like to buy myself some insurance. So I go out and buy this. And it basically, for $100, I could insure 100 shares. This cost $1, but every contract we said represents 100 shares. So it's $100 to insure my 100 shares. So is it bearish? No. If I was bearish, I would sell my stock. So I just would like insurance. So buying a put affords me, the owner of shares, the right to sell my shares at 120. I am guaranteed that fact. Who's on the hook? Somebody that sells me the put. And who wants to sell me the put? They're bearish. No, they're not. They want to own shares. That's why they said, I'll buy your shares, buddy. I'm in. You don't like them at 120. I love it at 120. Let's go. They'll sell you the insurance policy, basically. So you're both wanting Apple shares. How is that bearish? It's not. You're just debating the price. So you're both shares. You want the shares. So this situation is an explanation of what's a put. It's a way for the buyer of the put to be guaranteed they'd be able to sell shares at that price. They're not obligated to sell them. They can close the position before time expires and not have to do it. So they buy it, the other person sells it. And the way it works is pretty simple. If I'm in options and if I'm in options, I go here, click, trade it. I just want one. I have 100 shares. Let's go. And I buy it. Now, the other person is doing the exact opposite, is selling it. So what happens? The other person collects my money. So the seller of that put doesn't spend anything. Money goes into their account, but now they're on the hook. For 46 days, they could wake up owning my shares, the buyer. If I bought it, I could decide, hey, broker, please give them my shares at 120. They said so. The shares could be at 100. They have to buy them at 120. I can do that at any point in time. Okay. So this is the idea of buying a put for protection versus selling a put to buy shares. Never, ever sell a put on shares you don't want to own. The platform will let you do it, even if you can't afford it. Like if you don't have enough money in your account, they somehow sometimes let you do it. That's criminal. Anyway, they shouldn't. So the idea is there's a buyer and a seller, and in this case, they both want shares. So now, do I need shares to buy a put or buy a call? No. In fact, the only bearish setup for a put is if I buy a put and I don't own shares. Let's say I don't have shares of Apple. I don't want to buy shares of Apple, and I go out and buy this put. I spend $100. How can I make money? If price falls fast, I would make a ton of money. For example, Snap, the day before they had that stinker after our announcement, there was a whole bunch of 4-cent puts that people bought. They magically, people knew to buy for pennies, and those were dollars the next day. So they made thousands of percent on their money just magically because they had the drop on the information beforehand. So that would have been a home run. But normal procedure, all of these are losers. Statistically speaking, all of these are likely to lose if you just buy it and hope for a drop. So that's a way to short a stock responsibly. If I am bearish Apple, all I have to do is go out and buy a put. I don't have to short the market, because if I short the stock outright, I'm unlimited risk. Like I said, in this case, I spent $200. I'm short Apple. How do I make money? If Apple falls, this $200 turns into 400, 500, whatever. How fast does it fall? How far does it fall? It appreciates in price. If it doesn't fall, this starts to lose value, and then I'll decide to close it. So it's an easy, cheap way of shorting something. So that's the explanation of a put, a very basic explanation of a put. It's the idea is the buyer of the put wants a guarantee they can sell a stock at that price. The seller of the put would love the opportunity to buy the stock from that person who's selling it. Because this way, one person's, hey, I want out. The other person, I would love it in there. Okay. Let me explain it extreme. I always use this extreme example because it raises eyebrows. Hold on to your chair. Who likes Tesla here? I'll wait. Who likes Tesla? Me, I like Tesla. Vincent likes Tesla. MG, okay. It's okay. Okay. Would you take money today to buy Tesla much lower? Much lower? I know this number because I used that example the other day. How about, would you take $1,400 today if you promise to buy my shares at $350? $350 Tesla. It's $760 now. Absolutely, says Mbuso. Well, that's what you can do today. Don't go out and do it. If I sell this put right there, I'm committing to buy 100 shares of Tesla at $350. $350. Somebody will pay me $1,400 today or Friday for that privilege. So they want out of their shares at $350. I'll be gladly to take them over off their hands. So they would buy it. I would sell it. We have a market. Look, 80 of them happened on Friday. 80. So it's pretty crazy. So this illustrates the example of buyer and seller. And hey, don't ask why it happens. There is a seller at 350 of stock. So if you're a willing buyer, there's an opportunity to make money. Don't sell this put naked, especially if you don't know what you're doing. Tesla is not the first one you learn in. Okay, back to the Apple example. So now we beat to death the put side. It's protection, the idea of it. The opportunity to sell something at a certain price, predetermined price. Okay, now back to the call side. So what is the call side? What is a call? Okay, do you need shares to buy a call? No, in fact, that's how you get your shares. Let's say you're optimistic, you would love to own Apple, you're just nervous about the next couple of weeks. You just want to lock yourself in for the price. So what do? You go out and say, you know what? I don't want to spend 100 shares times 150 right now. That's a pile of cash. How about I give you $700 and you lock me in? So if I spend $700, I buy one contract, that gives me the right to buy shares at 150, which is current price, for 46 days. For the next 46 days, hello, broker, get me those 100 shares at 150. Why would I want to do that? If Apple soars, I'm in at 150. If it doesn't, I'm only risking 700. And I can change my mind. 2-3 days later, I can sell it. Sell this position. Just sell it to get rid of it. Okay. Now, do I need shares? No, that's, we said, how you open. Sometimes people do this not meaning to own shares. So bullish people. Like if I thought Apple was rising, I wouldn't buy shares. I would buy calls because the gains I get from the call are on crack compared to the regular shares. If the shares are up 4%, the gains in the actual platform on options are probably up 30-40%. But lose just as fast. So you got to be on point with your entries. So in this case, if I paid $700 and then the stock rallies, that $700 turns into $1,300, $1,000, $1,700. I don't know how fast it rallies. So if it goes to 170, this will probably be $1,600, $1,500. Then what do? You just sell it and you pocket the difference. You just literally doubled your money. If you spent $700, you got out of $1,400, you doubled your money. That's another way to profit without even needing to buy the shares. You just sell the actual contract. So you can live inside of options and not having to touch shares. But the underlying concept is dealing with the shares. So you shouldn't do anything drastic that you couldn't handle in real life. Like you shouldn't sell a put if you can't afford to buy the shares or don't want to buy the shares. There are ways of doing that without having that by doing a put spread. So if you have a lot of Tesla stock, you should be selling covered calls all day long. Money make. I can't convince my brother to do it, but he should. Anyway, if somebody that owns stock, a lot of stock, and sits on it and doesn't consider learning a new way of actually creating own dividends is missing out. Just investigate it. I'm not saying go out and do it willy-nilly. Investigate it. So that's a covered call. I said never sell a call. So who's buying if you're looking to buy a call, don't ever consider selling a call naked. What does naked mean? Like I don't own shares. I just go out and sell a call. Why? I'm on the hook. Let's say I sold a call in GME. And then GME did the 100% rally, 90% rally in 7 days. That account done busted. Why? Because you promised delivering GME at one price, and then it went to here. Now you have to deliver it at that price, which is double what you promised you would deliver it at. So you have to go buy it at the double price and deliver it at that smaller price. So that's a lot of pain. And by the way, it doesn't stop at 100. So when you invest in stocks, you buy a put, you buy a stock, you buy a call, the maximum you can lose is your money, 100%. That is a finite amount. When you short a stock, it's unlimited because you will continue to lose for as long as the stock is rallying. You say, I'll put a stop loss. Stop losses are not foolproof, friend, and you can't always find shares to cover you. So it is important to investigate everything before you start doing it. I personally would never, ever sell a naked call again. I have done it before, especially on Tesla, but never again. So now the alternative would be to sell a call spread. This is a bearish position. At least I know I can only lose $430 per contract, even if it goes to the moon. So comfortable with that scenario. All right, so this is called a bear call spread. Let's make it fun. Let's extend the learning to something else now. Okay, so check this out. If I do this, these are not trade recommendations. These are visual representation of concepts. This is a bullish trade right here. It's called a bull put spread, credit put spread. I sell a put, I buy a put below it. That's a credit. Money goes into my account. This is a bearish trade. I sell a put. I sell a call. I sell a call and I buy a call, and now I'm bearish the stock. What is this called? Anybody know? This is where these guys in the live room would be like bombarding me. Yes, I see. Chris Lean.
Hey, really Chris quick Lean. Here, Nick. Just want to give a shout out here to PXFR, PXFR 85. Welcome here to the family. Let's go.
Right on. Let's go. So this is an iron condor. This is two vertical spreads, Paul. Two vertical spreads. This is a vertical spread. This is a vertical spread. They're both credit, meaning I'm collecting more than I'm paying. This one is more expensive than that, so that's a credit. This one is more than expensive than that. That's a credit. The total I'm collecting, I'm going to round $100. and I'm risking $400. So that's a 25% yield on my risk. The equivalent to this, if I do one, is for me to go out and buy $400 worth of stock and have it rally 25% for it to deliver this. This one does not need a rally. All it needs is price to stay above 130 and below 170. That's all it needs, and I win. And they're hedged. One day this one does well, one day this one does well. Every day I have something going on in my favor. So this is called an iron condor. This half is a bull put spread, also called a credit put spread. This half is a bearish bear call spread or a credit call spread. Combine the two, it becomes a neutral position called an iron condor. That's all there is to it. So if I had my way, this would be the only thing I would trade forever. Finite amount of money I make, but it is consistent. It is high odds of success on paper. If nothing happens, like if no war breaks out, they usually win. If snap warning happens, they usually lose, but those are few and far between. The reason why statistically they prevail is because the math is there. If you backtest, you'll come up with the same strategy. Now, the trick is to be able to structure your positions in stocks that are not liable for that. Like I wouldn't do this in Novavax. I do butterflies too, but I don't actually. If I do, it'll be a broken wing one, but that's a conversation for later. They're butterflies, if you're curious, they're low odds, thread the needle, high payout trades. If you play roulette, it's the equivalent of almost picking a number versus like picking a region or a color or even an odd. You say, nope, I want this number to come in. And if you hit that number, they'll give you 35 times your money. Same with the butterfly. If you pick a spot where it's going to go and you nail it, the price, you get 10 times your money. You spend pennies, you make dollars. But they're low odds. You know, how many times people can do that? There are ways to widen the eye of the needle by making them wider butterflies that cost a little bit more. And they call them, I think, broken wings, where you modify the butterfly a little bit to make it a little more easier to manage. Yeah, it's not my preferred way of doing making, but I have come across them recently in the chat or in the live room. I've had a few people come in and say, "Hey, I heard Anne-Marie was doing this." I was like, "Okay, let me go see what Anne-Marie is doing." Some people are trying to make a comeback for butterflies. Me, I like straightforward, so I avoid biotech for credit spreads. You want boring, no headline stocks. Biotech every day is a freaking earnings report potential. FDA approval this, FDA approval that. Phase 2 failed. Setback in phase 1 is just you can't. So I avoid it. So avoid biotech. I avoid some stocks that don't carry premium, like Walmart. Even when Walmart fell apart, remember the recent drop? During this, I couldn't find premium to sell. There was like the puts were not hot. There was like, why should I sell into this buzzsaw? In fact, somebody asked me the first day, can we sell a put spread? I was like, no, one more bad day and you're in the money. And the very next day, that put spread would have been in trouble. So no, so I couldn't sell a put spread in that one. Also, there are some stocks that don't trade well, like Shopify. Although I do have a credit spread on it now, that's a rare thing because the quotes are kind of weird. The bid and ask are too wide. You can't get a clean quote. It's hard to trade. The TQQQ and SQQQ, I don't recommend you do spreads in those either. Single legs are fine. So some stocks like Ulta, what's the other one? Lululemon, they trade weird. They almost act, Booking.com, ISRG, they almost act like microcap when you go to do spreads. Netflix, I've done it before. Just make sure to treat it like a different company right now. So here's a story about Netflix. It used to trade solely on the growth of user metrics first, and then the US growth started to shrink or slow down. Then they said, oh, we only care about global growth. I said, okay, so they've been riding this global growth thing. And the management is very cocky. And then 2 earnings ago, I thought they sounded humble. So into last earning is like, I'm afraid for Netflix. I think there's a big stinker coming because somebody that cocky doesn't immediately come back to being humble unless they saw something bad coming. 2 earnings ago, sure enough, they said, we're going to suck even worse than we suck right now. They said things are bad and it's going to get worse. So hopefully he was so bad with his message that now the expectations are incredibly bearish. So now if they deliver regular bearish, then they might spike. But this is a different company. And here's my statement on Netflix. If it's rallying, the market is rallying too. Why do I want to inherit its own problem? So between it and the QQQ, I would rather have the QQQ, which is the ETF for the NASDAQ.
Right. And so look at something like UCO, right? It's a Pro Shares, Bloomberg Crude Oil.
Okay. I had this conversation yesterday in the jacuzzi at my friend's house. I don't buy it. I don't get the concept of why oil prices are naturally higher. It's an artificial environment that we're using less of it. Facts, not my opinion, facts. We are slated to use less of it. Also fact, not one car company, actually, let me rephrase, all car companies, all the major car companies committed to having no fossil fuel vehicles in a decade. How is this goes in hand in hand with a bullish scenario for oil? It also ESG investing. Every government is now forcing companies, making it illegal not to have certain carbon footprint, which puts downside pressure on consumption of fossil fuels. So where the fudge is the exceptional enthusiasm on upside potential for oil, the commodity. So unless oil companies pivot into some other ways of going down the energy path, I think this is bullshit. So we'll see. We'll see. It's a manipulated stock price. And the White House is going to eventually do something about it, because they can't just sit there and beg and grovel Saudi Arabia, please, please, please pump oil on our behalf, when you have more than them just sitting right here. So what does it matter if they pump and ruin the economy or the globe, or we pump and, hey, if you bring it from there, you're burning fuel to get it here. Isn't that less green than pumping it here? I don't know. The whole thing is a sham. So we'll see what happens.
Right. And I have someone here asking about an interesting duo, Twitter and DWAC. So comparing both.
Okay, so to answer BP is vulnerable a little bit on the downside, and then we'll go to Twitter and DWAC. This is vulnerable, the yellow. Don't short it, but just be ready to watch the RSIs. And if the RSI doesn't beat that part, maybe it's going to dip a little bit. Buy it on a dip if you're interested, but I would avoid. Investors in oil companies, I think, will be disappointed. Traders in oil company are having their field day, which is fine. Just make sure you know which one you are. You're welcome. Twitter, I went long. So there's something called arbitrage. When there's a deal between a company to buy another company, they set a price. In this case, the price is up here. Yet Twitter was down here, right? And then we found out why. Nobody believed it. So I said he was bluffing when he offered to buy Twitter. And then I thought, you know what? I'm going to take a flyer. And I said 50-50. I think the deal will get done eventually. So I bought a call, and the call made money right away. And then it collapsed because the next day the headline came out. So I'm holding, I think it's down 40%, but it's a coin flip trade. So I risked enough that I'm willing to walk away from. And if the deal gets done, it's going to be closer to 50. If it doesn't get done, I lost my money, which is fine. But it is a binary event. So aside from the binary buyout event, this is a base for Twitter. It's not an opinion, it's fact. That was a base for 2022. So from that perspective, I can stay long the stock if I owned it. And there is support below it, which is the March pandemic. So it's not so bad from that perspective. What could be bad is if indeed there's something they're hiding that comes out in the due diligence process. But I think everybody knows what's up. So panicking out down here seems wrong. Upside potential outweighs the downside risk. That's probably the best way of putting it. DWAC, it's a SPAC. Every SPAC went to $10. Why not this one? That's all I'm saying. I'll download the it's not available on Android yet, right? I'll download it and download it and see what it's all about. Maybe it surprises people with the content. I'm not sure. We'll see. And the next set of elections might also place it on a map. If indeed going to get political. I know nothing about politics. Okay. I want a party that doesn't exist. But I know this White House is kind of wacky right now. So in the future, if there's another campaign coming and Trump runs and he commits the DWAC,
that's a pump. That's a
maybe,
pump for the
maybe
stock.
it's a pump for the stock. But as an investment, I need more tangible fundamentals, like what's it making in money.
Right, right.
As long as this is an orange line, which is spending, and there's no blue, which is the income, I find it hard to risk money on it. Trade it, trade it, actively trade the stock. And I can help you do that. Join the group and we can trade it. In fact, we have traded it. I do have lines on it. I said you would get out up here because that's the target. And look how accurate these were. These arrows were not after the fact. They're not after the fact. In as far as facts are concerned, they are fighting. This is a 2-hour chart, so it's a relatively short period of time, February through now. They're fighting for control, and you can visibly see it. There's a high, there's a low, and we're literally in the middle. And then there's an even, wow. Okay, so I'm glad you mentioned it. Look at this. Okay, that is unusual flatness from a very hyped up stock. That is incredible. Look, there isn't a stint like it. This was the only one. So place your bets.
And that's the thing, like you do that with, and that's the thing. So like I was looking at that technical level, right? And it's like that, it seems like there's something going on there, and we are about to enter the midterms, and that's like could be a hot zone. But look, guys, obviously you guys are, you want to talk to Nic. I get it. We have too many questions right now to go through all of them, guys. I understand. But look, feel free to join the chat room.
I'm jumping on this first thing tomorrow. I'm going to start lining this up. I bet you there's a trade there somewhere. In the live room, we're going to be talking DWAC. If you're here from the live room, somebody remind me.
Right. And that's the thing, really, because to be honest, like when I got in there Friday, right, it was Friday, Nic, I took a trade on the Qs, and honestly, man, I could have either sold for a very big 60% loss, and that would have been a pretty big loss, right? But instead, I popped into the chat room. You were charting the Qs live, going through, the chart behavior. And I ended up selling those contracts for a 30% gain. So, I mean, my Friday was pretty wild, man. But like, I see the value. And look, since we started the chat room, it was just you and me, Nic. Now we have, we have over 500 people, but 300 people live usually there. And, when people get in there, they can ask you questions about education, about their own trades. They can get longer term trades if they have, some people have a full-time job, and maybe they want trades that are a little bit less, day-to-day manageable, right? A little bit more outdated, right, Nic?
Definitely. So I think we cast a wide net in the live room. I designed it to be a fast-paced trade place, but it turned out to be just a hangout and discussing primarily fast-paced, but also all kinds of trade setups otherwise. I think this one has a move going, and I'll try to determine in which way. That's the trick. Okay, I know there's a move coming, but I should wait for hints as to which direction it should go. What does blue and okay?
There's this other stock there, Nic, that I wanted you to take a look at, because you always you've been looking at this one before. Check out Boeing. It's at that level. I don't know what's, and look, there seems to be some sort of like reopening move, kind of along the lines, with some stocks. But
Boeing was a sell a put spread at the bottom. That's what my conversation was with people in there. I said, the problem with Boeing is the problem with airlines. It's the airlines are its clients, and they got leverage to the nose to survive the pandemic. So they don't have any scrap to buy new planes. But sales has never been a problem to Boeing. So I felt comfortable going long Boeing into the 100 mark via sold put spread. I didn't officially send it out as a trade because it is a headline stock, and we had a couple of other better trades lined up, and they worked. Something a little bit more.
Is this? Is this more of
something
like
that
a,
it's something less volatile. Like I can't remember now. Like Microsoft, for example, it seemed like what happened to my list, my running list? I can't remember where I put it now. That's a shame. Was it 514? Okay, yeah. CME was one. Facebook, even Beto, which is still remaining to be seen where it ends up. But look, it wasn't ready at one point, and then it was. Marriott we took, and that played out well. Snap did not play out well. If somebody bought the dip in Snap after the fact, which I sold put spreads into the drop, I thought, I don't know what he said. He said slightly below. He didn't say slightly. Snap CEO said we're going to come in below below the low end of the prior range, which was 20 to 25%. But nowhere did I see the actual number. So hopefully it's not like, zero. That's below the 20% or shrinking. That would be insanely bad. So I took a sold put spread that I will get out of. It's almost at maximum gains now. There are other candidates, like I'm long SoFi already. I mentioned that. SE would be a good buy on all dips. Uber is okay to own for the long term. Shopify, I'm already long. So there are other things, but Boeing was a candidate. Boeing was definitely a candidate. Every time it comes to $100, it's a candidate. We traded the hell out of it when it fell into the pandemic. When the government came out and said, we will help airlines, and somebody asked the president at the time, it was Trump, what about Boeing? And he was like boarding a plane or a helicopter. Twice he said, we will help Boeing. So I immediately jumped into the live room, a chat room. I said, I'm long Boeing right here, because it was like $89 or something. Sold puts, bought calls. And then after that, every rally failed to 100. So we sold put spreads into 100. And then they started falling into 110 and not lower. We sold them into 110 and then 120. And that was the balance. And now it is below 120. So that it was. So that was a trigger. Hey, you can repeat what you were doing 2 years ago. But I just didn't do it. I just had enough trades on my hands.
And this other stock, well, look, we've been talking a little bit about cybersecurity for a while here. And then, this company, VMware, apparently was trying to get acquired by some company.
Yeah, I don't touch VMware. Great company. Mr. Dell is, oh, it's public. I'll spin it. No, I won't spin it. I'll buy it back. I'll make it public. He is just making billions off of the process of listing companies, taking them off, selling them, alliance this, buyout that. I'm all freaking confused between Dell and VMware, both good companies. I wouldn't touch either of them because of what happens with the headlines. The way I trade, I need predictability. I need visibility. And this bull crap is not predictable. I'm out. So somebody asked me, what about VMware? Great company. They asked me just before this pop. I said, great company. If you can stomach the risk, go ahead. But the premiums are not there anyway. So there's not enough reward for me to take on this extra headline risk. So I migrate towards something else.
Okay, right. So look, there's a couple other stocks I've been looking at, but I've noticed that they have really dry options. So in that case, what would you recommend if you see a stock, like you see stocks in mining? They don't really, I mean, I was trying to look at X, and I couldn't find a lot of liquidity. I'm trying to trade the options like short term, and I see maybe 200 contracts, so like some numbers.
I traded X. It's pretty liquid. Don't let that stop you.
On
X
the weekly, or which
liquid.
one? Or like a longer term trade? I'm assuming it was a longer term trade.
It was, what did I do with X? I bought a call and then I sold, yeah. And then I sold a call to shorter term to mitigate the risk. So I expected upside and it came. But after the upside came, I sold calls against it to lock in some profits.
So you're bullish long term on X.
I'm not bullish. I'm just trading the price action.
Okay.
I don't. It's like oil. The only reason it's making more money because steel costs more, not because they increase their business. Because the price of the thing they deal with is more expensive. So I don't anticipate that staying there. I know this because my son is a welder. He likes to fabricate things, trucks, truck parts, racing truck parts. So if he said, okay, this job usually costs $4,000 to do a roll cage inside of a car, it's now a lot more just from the steel factor. It's like 2 or 3 times more expensive.
Yeah.
So,
well, I was reading there that Well, I mean, China, I think they went in lockdown because they had like what 50 cases, like they didn't have like a huge number. It was, but then now they have 10, and now they're trying to reopen, and they said they're going to reopen. They moved their rates to zero. So I'm thinking metals have they have, I mean, because they do use a lot of them there. But what do you trade commodities? A lot of commodities like copper, that sort of stuff.
I do not, but a chart is a chart. You bring me a chart, I can help you trade it.
Let's look at this ETF. It's called COPX. I think that's copper.
COPX, I've never
Yeah.
seen an ETF from copper that's liquid enough to trade with options. Wow. Look at that. I have notes there, so I'm clearly seen it before. I just don't remember. Okay, here's the easy story about this one. This is not an obvious entry point for COPX. Why? You have a high, you have a low, and somewhere in the middle lies the truth. You're running into moving averages. You're running into a cluster of failure. So this is not a place to easily expect more upside. A dip into 37 would be a better place to come back into it. So if somebody said, I want to get long COPX, I would say, I'm curious. I would say, not yet. Not now. You missed it, the easy rally. Yeah, that's not very liquid. So if I go to June contracts, it's not very liquid. That's my experience with these things. So I would not do options on it, but you can trade the stock itself. Look, there's a gap here, there's a failure here, there's a failure here. Odds are it should fail again, but you have to respect the higher low trend. So what you want is for them to fail here. That's okay. It's normal. Come back, hold support. Look at that big gap, maybe down to the big gap, fill the gap, and then come back here. And then now you have an inverse head and shoulders you can price out. So you draw one shoulder, one head, you form the right shoulder, and you take that out. And the technicians will tell you that the upside should be about this much. I usually look, I like my level better because it lines up with that. I didn't even make that on purpose, but that's how it always comes out. I put it where I think it should go, and I look left, and it always matches up to some pretty important level. But technically, it can go higher than this. Now, then you go look into internals. The internals are still conducive. So this is the RSI. Everybody knows the relative strength index. It doesn't matter what kind of internals you use. Pick one that works for you. I use them as secondary, like extra information. I have enough from this chart. And then if I need more information, I go in here. Okay, what's the internal of the stock look like? So the RSI is going well. The rate of change is going the wrong way. So this is a modified RSI, which is not telling as happy a story as this one, just barely. So this is where you say, okay, so I can expect a stall, and I should say put an alert to investigate it lower, in fact. So then I would buy the dip for this opportunity. Now, if it doesn't, and if it comes back to here and it stalls here and comes back to here and it loses that, then it becomes a bearish setup for a drop to here. So you have to be agnostic. There is resistance, there is support. This is the likely path. If support fails, you start looking down. There is support, and if that support fails, it's a bearish trade. See what I mean? So you chase. Right now, I don't know which way it's going to go. I know what lines matter. It's going into resistance. I would buy the dip in order to take that resistance.
Oh, right. So what do you say about people that, want to go long on things like maybe PayPal, things that have been down a lot, maybe?
Yeah. So PayPal is a conundrum. Somebody please let me know if I'm missing a piece of the story. The P&L is super healthy. I don't get it. And it's trading like worse than Didi, which is delisted. So if you own stock here, I think you'll do well over time. I wouldn't add to it. If you're looking to get long, I think you could do just as well with something else. But whatever you do, don't go all in with a lot of conviction. We may not have the whole story. I remember what broke the stock. I think there was a rumor of them buying, was it Pinterest? And that was the end of it. That was the end of it. And then it never held another pop again. Look at it. So every rally has sold. This is a rally. Expect it to sell, right? So how do you know that this one is different? When it sells, it finds support and it establishes a higher low. So rally sold, rally, If it sells and they hold this 76-ish and they come out and take this out, okay, now we got something. Maybe we have a small channel building. Don't anticipate it until you actually see it. So what do I want to see? I want to see them beat this moving average and bounce off of it. In other words, see this descending line? I want it to see curve up and them coming down and bouncing off of it. That's how you build an ascending trend. Very important. If you don't see that, don't believe it. Don't believe it. So somebody, Chris, is asking over and over again, what are the colored bars? Gold versus blue? Doesn't matter. It's upticks and downticks. It doesn't matter. The whole volume bar matters. So if you want to learn something new, you know they say price is truth. This here is volume, like these bars, only they tell you at what level they happened. That's more important than anything else. So if you look at a daily chart, you'll see that 115 is the place where everybody loves this stock. So when it runs into 115, it's going to find resistance. Second place is up here, giant gap in the middle. So if you clear 125, 130, that's why gaps fill. Look at the gap. Look at the volume gap, big gaping hole. So if you're slogging through mud and then suddenly you hit flat earth, you go whoop. So if you clear that pile of mud, you slip right through to 185. That's 3 steps removed, but that's the explanation for you.
But I would say that like the most important thing really is, well, you do teach a lot of technicals in your sessions, right?
Yep. In plain simple English and stuff you could use, and it's nothing magic. Look at it. There's no magic on here. Every once in a while we use harmonics. I don't use harmonics. So harmonics it's a study. Basically, people can measure, and they have a set of rules in between these lines, extensions. When they happen in a certain parameter setting, then they say mathematically, odds are they do this. They retrace. So you can pay for a tool that does it for you, or you can spend a lifetime trying to perfect the craft. I chose to use a tool that's available, but it is witchcraft, basically, witchcraft, if you use it properly. But that's the only tool, one of the few extra tools I use. And it's relatively new, and it's pretty damn accurate.
And yes, so look, guys, we've been here already with Nic giving you guys about pretty much like a free 2-hour education session, guys. And we've gone over a lot of things.
Yep.
And this is just a little bit of what we do in the chat room. So Nic, I know that I don't know really how much longer we're going to be here. So guys, I do want you to know that this is something that
it's time for barbecuing.
We're only going to have this until midnight. It's Memorial Day. We're giving you guys some time to go out, grill out, beer out, and everything. It'll be there at midnight. Okay. Nic is amazing. He puts so much time into this that, if you don't stop him, the man will just, go on till he passes out. So you got
to. It's powered by soda.
Yeah. And folks, I know that the value of this, because I remember, I remember when I started trading and I didn't have Nic, right? But ever since I started learning from Nic and going through those starter kit videos that he showed you that are just for Inner Circle members, I would say that was really the beginning of the change. But then as you start learning, as you start growing as a trader, you're going to start picking up faster. You're going to start moving faster, trading faster. And that's part of trading in a community, like trying to do this on your own at this point. Like,
never trade on your own.
Like, who are you kidding?
Find a group. If not mine, find a group.
It's just, let's just go by the stats. What is it? What's the number, right? Like 90% of traders blow up their account their first year and maybe don't come back.
I don't know, but my goal is not to have people blow up inside my group. So
exactly,
the group thing works if you have a relatively well-managed, quiet group. So I hear of Discord groups that are, I should have pulled it up. One person says, I belong to 3 or 4 other groups, and I came from a Discord group that is so noisy, everybody blurting out things. And I meant to pull it up, and his words were perfect. And he said, this is his favorite. Maybe I did pull it up anyway. I did not pull it up. That's shame on me. Anyway, so that person he's an active trader. He belongs to a whole bunch of groups. And he said this is his favorite one because everything is on point. There's no noise. We joke around every once in a while, but we're constantly scanning for something that's tradable for human beings. So something that you can follow along.
Yeah, and I do want to give a big shout out here. We got Jeff, newest member here of the family. I got to give him a shout out. You know how it is. Let's go, Jeff. Everybody welcome him.
All right. So let's do another ticker while we're here.
You're all right. Let's go.
Wait, stump me if you can. If you're out there, are we on YouTube?
I think so.
Okay. So if you're out there, stump me. Let's go. Give me a ticker. Nothing. Come on. Oh, ARRY. That's a tough ticker. I do remember it. Nobody's asked me about it lately because it stung people. X, I just went through X. Christopher, where were you? Okay, so let's go to a daily. Let's go to a weekly so I can get the lay of the land. Clearly, this stock knows how to move fast, up and down, unfortunately. So this is a weekly chart. So zoom out, big picture. For a while, they tried to hold 30, they didn't, they fell apart. They tried to recover it, they couldn't, they fell apart. They tried to recover it again, they couldn't, they fell apart. In the process, they tried to hold 13. They couldn't, they fell below it. They tried to recover it, they couldn't, they fell below it. They're trying to recover it. What does that tell you? I shouldn't get long with it going into that part. That's the big picture. Going down to a daily. Same story. Now there's miniature good news that they overcame a prior fail. And if they can get anywhere close to 12 and fade back and hold 10, that would be good news. Because then now they would start building that ascending channel I told you about. That's what you want. You want to watch for a buy the dip method, systemic buying. So far, it's sell the rip for months. Now you want to see a miniature buy the dip. So you want to see them ping pong inside this channel. So if they fall into 950 is okay. 10 ideal, 950 okay, but bounce and take that out. Get to here, fall back down to 1050, 1060. Bounce, take that one out. That's a big one, by the way. Come back down. So if you're invested already and you're long already, I would not add. That's what I would do. How do I trade this? I would buy shares and hang on to them, or I would buy calls long in time. And if I have the opportunity to sell calls against them, I don't remember if it was liquid enough, I would do that. Like a call diagonal would be probably best. TSM, is that Taiwan semi? Okay, so TSM, you have to keep in mind that Taiwan, China, US, potential headline. So why not the XLK? So if Taiwan falls, this way it's because of headline specific to Taiwan, it doesn't, you're not blown out. The XLK or the SMH, if Taiwan semi is rallying, then so is the SMH or the XLK, or the QQQ for that matter. So why take on that extra? Plus, what is this? Gap above, gap below, gap here, gap there, gap everywhere. It's not a good stock. However, it is trying to establish a rally that's sustainable. Mind you, this happened here and it failed. This happened before that and it failed. So be careful with that. This rally may fail into that. Look at these 1, 2, 3 failures at 96. Big gap into that zone. But if they get there, I would get out. Or chase it above there. So I said available back then, it didn't happen. I said must hold, it didn't, and it fell to my target. So it is tradable. Just respect the fact that the bears are in charge. The bulls are trying to take it away.
And just for those that did recently trickle in, right? So you do have a member meeting on Sundays, and you go over about 150 stocks and people's comments as well. You put your comments. It seems like this is more or less what these people would love to be part of, right? Where they
right.
Just
so I will do the homework.
Right.
I will do the homework for you. I will try to set up the trades that you want. All you have to do is pop in and say, I'm looking to trade TSM. Give me the best trade for the next couple of weeks. I'll write it up. If I like it, I'll share the whole video. 2 trades this week.
Yeah, and maybe that's what they're expecting. Like we're not going to give out trades here, guys. Like that's not what we're here for.
No,
like
no, no.
yeah,
Two
like that.
two
Yeah.
trades this week came from ideas, like the Microsoft trade, I think, and somebody else asked about something else. I did a whole video around it. I said, here's how I would trade it, Microsoft, and from start to finish. Here's how I would trade it with shares and with options and crypto. We even do crypto. So
that's where people would, because okay, so people are asking where can they get your trades. So we're not, so Nic will not do that here. But in the chat room, in the inner circle chat room where he is all day with his members, that's where he's going to do that with you guys, where he can get detailed. You can have a conversation with him, that where we have more time to do that, right?
yeah, if you listened, there were a whole bunch of trade ideas brewing inside everything I said today. Like even this stock right there, it is tradable. But if I'm looking to invest in it, why wouldn't I go out and eliminate some of the extra risk that comes with that stock? However, this company is fine, and it is investable.
So the details.
If I look at their P&L, it's pretty healthy. There's strong growth. They lose money, but they're established.
And Quanesha Jones in the chat asking about will we learn about entry points in the inner circle chat room? Absolutely.
It's all about entry points.
Risk management.
This company produces $40 billion in actual cash from their operations. Whew.
Yeah, and Karen Toos on the YouTube chat, do you have anything to help for beginners? Nic, I don't know if you can show really quick that the videos that you do have for the new option traders that are trying to learn right there. So, Karen.
Trade setup information, general trade setup. What are options from start to finish? What are put options? What are call options? A whole video about that. What is a spread? Explaining that. What is a credit type of a spread? Table breakdown that's a little bit involved as to how I write things up. When to book or set, when to book profits and set stop losses.
Right.
I've done a couple of these. Cash settled options. What is a cash settled options? You hear that AM settled, PM settled, cash settled. I have a video explaining that. Breakout swing trades, type of a trade. What type of a trade is suitable for me? So I keep sending out weekly videos. Each one of them is a trade school from start to finish. So if you're, I forgot the name you mentioned, if that person is new and you're ever thinking about trading options, you can join my group. You will get that. On top of it, you will get my entire stock review, regardless of how you trade now. I guarantee you, I have dozens of people in the live room that don't touch options. They are equity traders, and some that are futures traders. But the concept, the way we approach things, the first thing I said on TSM was fundamental, right? I said headline this, war that, and then I looked at these numbers, the P&L. I want to know that they can generate their own cash during a rate raising cycle. That's super important. Like what is that called? The car vending machine. What are they going to do next year to if they need to raise cash, because they burn cash like nothing, like nobody's business. So you will get the review on the stock, and if you just trade it the way you do, you will have it's like having a stock analyst at your disposal on retainer.
And then Benocchi on YouTube, you're there Monday through Friday, open to open. Yeah, so Benocchi, it seems like, okay, so we did go over some of these things, but we're going to go over them really quickly. So the chat room schedule is Monday to Friday, 8:30 a.m. Eastern until 5 p.m. Eastern. We also have a session that is from 10 a.m. Eastern till noon on Sundays. So if Monday to Friday is not enough already to you, day in to day out, you still have Sundays. So you'll have all that time. On top of that, you have the access to the live trading chat room with Nic. So if you'd like to day trade, scalp, or even swing or long-term, whatever it is, crypto, equity, or if you're trying to learn, a lot of people are just trying to learn options to make some extra money. So Guys, I'm telling you, there's no better way for you to do it than with a live instructor, with a
You
live
can't
mentor.
you can't describe it. You're just gonna have to try it. And luckily, the folks at Benzinga give you your money back. I don't work for Benzinga. I work with Benzinga by choice because I like their operation. They're honest people. So I've been working with them since 2011. I'm an engineer. I didn't come from Wall Street. I figured this stuff out on my own, and it's not rocket science. It is not super easy, but it's doable. So Benzinga, I guarantee you, I confidently guarantee you, you will be a better trader leaving my group. You will be a better trader, regardless of whether you do my stuff or not. You will be a better version of yourself, guaranteed, guaranteed, because
That's
you
the
will
goal.
learn new stuff in there. Also a guarantee. And
I
if
mean,
you
what's
don't find the value, that means I failed in pointing it out. And luckily, these folks will give you your money back.
there's a
So
7 day, or let's be specific. There's a 7 day money back guarantee. So you have a full
you
7 days. Yeah.
you can't find anything else that's close to that bargain. Let me tell you that these are not my prices. My prices would be thousands a month
Well,
because
that's until midnight. That's on. So 70%
because
off
I
until
sit in
midnight.
this chair. I sacrifice my day and my trading abilities because I'm willing to help people, and it's hundreds of people. We have 300 people thereabouts live every day watching the screen. We have like 700 or 800 more in the chat room, not live, just not watching the screen because they have jobs. And then we have thousands more just reading the write-ups. So which one are you? If you have time to join me in the live room, you get the best of the best because you have my attention and I'm actually verbally I'm like responding with voice and sharing the screen. So you will get the best opportunity. But I answer all questions from all
Right.
time frames. So
And that's the thing, guys. Like we have about 500 people here, and everybody has a question. And we're trying to we got through as much as we could, but this is really just to show you a sneak peek of what it is that you could be doing with us, with Nick specifically, throughout
yeah.
the entire day. And I promise you, there's absolutely zero chance you come out of this a worse trader. Like, there's just no way.
If you want to learn charting, I speak charts in plain simple English, and it's a game changer. It's a game changer. Look at my charts. Everything on there is hand drawn. I have very few tools because it's all about levels first, and you need eyeballs for this and nothing more. And then you look at some other things that you might want to add on to it. Like I have volume profile because it
I
actually
think
tells me what.
a good thing to do, Nick, would be maybe to just walk them through what happened Friday at the close in the chat room, so they can get a sense of what really this can do for you in
Okay,
serious
so
times.
Friday, I told you I lost some money because I expected a dip into the last minute. The right here, I expected a fade into at least 400 and a little bit lower. But I said if it does happen, the market is going to bounce right back up and come out because of the information and the options. And then it broke out. I said if they take out the new high of day, they're going to go to 415. So you should buy your calls at 415. And they were pennies. I can't remember the number, 15 cents, something like that. And then this happened with like minutes to go. And if you buy an option that costs 15 cents with minutes to go, and then it goes in the money the right way in your favor, you make thousands of times your money. And that's what happened. So I was bearish until I saw the evidence flip. I was like, bearish, for the last 15 minutes. And then the evidence flipped and I said, forget about bearish. They're going for the 415, if not 416. And it was like an unbelievable move. The type of move that GameStop does, which makes me uneasy. So charting is it's a simple art. You can complicate the hell out of it and trip yourself up. And you will see other charting styles in there. I have a few other people in there that discuss their own styles, and we come to the same conclusion. Because if my style is different than your style, we should be both saying the same thing, right? If we're correct, because price is going where it's at, and we're seeing the same thing from different lenses. So in theory, It doesn't matter what style you do, harmonics, you do regular ruler charting like this one, level charting, or you use Ichimoku or whatever. You saw me open up an Ichimoku cloud. I don't use Ichimoku, but I thought it would give me a little bit added information because I know how to use it. I just don't use it. So whatever tools you use, I'll help you hone that style and create your own way of trading. I can tell you what not to do confidently, like what not to do, even if in hindsight it ends up doing what I say it's not going to do. Doing the right thing in hindsight is not always perfect, but you have to do it all the time to be consistent. All right, let's see here. What else do we have? One more ticker and we call it quits. It's time to throw some stuff on the barbecue. Beyond Meat stuff. I'm not killing animals. Beyond Meat. Speaking of Beyond Meat, I haven't looked at the chart in a while. Ugh. Okay. That is no touch. Yeah, pays. Okay, yeah, I saw you ask for pays. What is pays? Okay, so it's not any better. You're all excited about PaySign. What do they do? Engages in the provision of prepaid card programs. Is it like SoFi? Almost, not quite. Wow, this is a tremendous, is it a SPAC? That is devastation. Yeah, I don't know what you want me to say about pays. There's nothing good about it. The chart itself, every rally is being sold. The rally into 140 is going to get sold. If not, 155 is going to get sold. It looks like a penny stock to me. So if you're investing in it, I urge you to not average down. This is the type of stock you should not average down. I'm not sure what you expect out of it. If you ever catch one of these, exit. That's my opinion. AFR. Another tiny stock. What? Like Air France? This AFR, the Zetra or the CME? I don't know. It sounds like Zetra. What's going on here? No. Give me a better ticker. How about Affirm? Okay. So Affirm has a good business going. It's misunderstood by Wall Street. They are selling rallies, so you have to respect that. See, they're selling rallies. Every rally was sold. Now they're going sideways to a degree. So 31 matters. I would feel much better if it's at 35 or more. Why? Because they would start building that ascending channel we were talking about. Right now, they haven't started yet because they're going against a very tough line. So if you take out 31 to 33, then you get up here. Now you would have one bought dip, two bought dips, and then you start looking at some ascending. Oh, there we go. So last week I said, have we started making an ascending rally? And if so, I want them to fade here so they can come back and take that out. Buy the dip if it happens or buy the rip. Okay, so this is me saying this. I have it programmed. I say it often enough that I have it programmed with 4 buttons that comes out. So you buy it from here. If I'm not long Affirm, buying it long into this fail is not very logical. But if I'm insisting on doing that, I should put a tight stop. What does that mean? I should say to myself, here's $1,000 I'm risking. Could be different for you. And if I lose 200, I'm out. This way I have a plan because I'm anticipating the breakout and that shouldn't be good. Preferably buy the dip. Like if tomorrow the markets open down, I have a feeling they should. Right. If we open down, then you buy the Affirm dip and you swing it back up here and then they come here and they take that out versus buying here and getting stopped out here. Or sit out until you see the breakout and chase it. So buy the dip if it happens or buy the rip if it happens first.
Okay. All right. Interesting stuff there. So, well, I mean, I guess that kind of calls it a day here, folks. Nic, I'm going to stay here just showing the chat room really quickly. Any closing remarks here on your end on why the folks should give the chat room a shot?
You should never trade alone. and you should always trade with a friend who's willing to help you with stocks. So that's it. And then I'm out of here.
All right, man. Well, thanks a lot, Nick, for coming on here and for, going through the session here. And
Chris
guys,
Lean, I've seen you here twice. I saw you here before. What are you doing out there? Are you not part of my group? Get in the group already. What are you waiting for? Tom, you too. Kanisa, did I say that right? You too.
okay, we're going to post the link in the chat room. Chris, I hope I see you there, man. We're counting on it.
Listen, they'll give you your money back if you don't like it. I promise you're going to love it. I promise. It is total fun. Total fun. You get to see me lose my temper every once in a while. That's also fun. Okay, I'm out of here. I'm being summoned out there. So have yourself a good weekend, folks. We'll see you tomorrow.
All right, man. I'll see you in the chat room tomorrow, Nick. Thanks a lot for the trades.
All right, bye.
All right, folks. And for those that joined here, I'm just going to stick around for a minute or two, just going over really what you're going to be using in the chat room. Keep in mind, this is only till midnight. It's just for the Memorial Day thing that we're doing it. So there's two. This is the chat room. This is how you're going to see the blue chat room, right? This is the main one. And on the left side, you see there's two channels. Inner Circle Chat. This is where everybody is posting, including Nick, all the members, right? And then you have Nick's important messages. And this is where Nick is posting setups, trades, entries, videos. This is the Sunday session for 529 that he did yesterday. He's got about 150 tickers, something like that.
Hey traders, Nick here on.
I mean, you got it right there. So you guys that just joined, you guys that definitely wanted to get, hundreds of tickers and things like that, get new trade ideas, that sort of stuff on the short or the long side. This video is amazing. I look at it every Sunday, because I can find short ideas, long ideas, and really I don't even do any other work. I just look at the video. The members put the tickers that they want reviewed. So you put whatever ticker you want. And we literally, Nick reviews it. And then anybody, all the members from the Inner Circle chat room can watch this. Jim Cruz, my homie's in the chat. What up, dude? Good to see you there. Okay, so this is the Sunday video, right? For you guys that just joined, take a look at it. Very good. Here you have a different type of trade that he put out there. Trade setup for balance right here. Okay. All right. You get the trade setups, clear entries, calls, spreads that you're going to do. It's all there, and a video with a full explanation of there as well of the trade. This is on 527, still applicable. Now, the other thing that you're going to see on Nick's important messages, meaning on this channel, right? Nick's important messages. That's the place where only Nick can post. So you're going to click on live session there. He has all the indexes charted out by 8:30 in the morning. You'll see the links here. Also the futures. I look at the NASDAQ and the Qs. That's what I trade. And then I get into the live session. I click here and you just put in your name or whatever and right now, obviously it's closed, but you're going to see here all the people that are there, including Nick sharing his screen. I just wanted to show you how to pop in there so that you can do that. And as far as the trades, you can see some of them right here. Like he'll do it every day, every single day when he has the live session. So this was Thursday, 8:30 a.m. Like same link, right? Well, it's a different link, but you see that it says live session, and you'll click on that link again. All the indexes charted in the morning, pre-market, and the futures charted pre-market as well. Keep in mind, we have a very lively conversation here in the live room, okay? The other thing I wanted to show you is that you do have charts available for free in this. This means that all you have to do is go in here and click open chart and pop up, and you're gonna have your chart out there. You're not gonna see it if I click it because it's a new window, but all you have to do is click that and you get free charts there, included in your subscription. The other thing we added is the scanner. It's not available anywhere out there on Benzinga or anywhere else for that matter, because we made it for the Inner Circle members. You have gainers and you have losers. I'm not saying to go trade everything here, but it's a good place to find opportunities for both the short and the long side, right? And the other thing, settings, if you do want to change like, your name or upload a picture of whatever, you can do that there, save your changes. Then you click chat, you go back to the chat room. Now, if you do, this is how I have the chat room open. I clicked on this link, open chat in new window. and it takes me to this window, right, where it's just the chat room. And this is pretty much what I have open with other stuff that I have when I'm working, and that other stuff. But for the most part, I really do enjoy being in the live room with Nick, because he's there going through the charts, going through all these, levels with you as it happens. So if you are a day trader, if you trade, if you're not comfortable holding anything overnight like me, if you do want to maybe, or either maybe you want to swing something, whatever, like if you're looking for short-term trades, maybe not like leaps, nothing like that, this, you are going to probably get the biggest benefit from this chat room because of the volatility that we have in the markets. So part of that is recognizing that, for example, in my case, I go short or long on let's say the mark on the Nasdaq, right? So I need to be able to recognize if I'm right or wrong, and if I'm wrong, I'll take the other side. But how do I know if I'm wrong, right? Besides looking at the chart. So that's why if a trade maybe might not be going my way, or I'm not 100% sure, if I'm not in the green, then maybe I'm not 100% sure. I'll pop into the chat room. I'm going to ask Nick, what do you think about this chart? He'll do it live with me, and he'll do it for every other member. So you could be doing your own thing out there. And that's what I was trying to say earlier. Advanced traders benefit from this as well, because it really does give you that support, that, that a mentor support that you need whenever, the time comes where you are not 100% sure if the trade still has validity to it, right? If you should still be in that trade. Now, Nick said there's different ways to kind of apply that, but I'll tell you, every trade's different. Circumstances are always different, and the type of trade you're doing is always going to, I mean, it's not the same for two people. So being in the chat room will give you that immediate mentorship, immediate education that you need, regardless if you're just trading, or if you're learning, or if you're trying to set up a trade for 3-4 months out. Let's say you have a full-time job, and there's plenty of people in the chat room that have a full-time job or a part-time job, and they're not trying to day trade or swing trade. They're trying to do trades that maybe have 2-3 months out, where they're just collecting premium and they don't have to worry about the volatility of the market, on a day-to-day basis. And those people do pretty well as well, right? They get their paycheck, they put on a trade, 2 months, 3 months later out, they collect all that money in. Same, by that point, they're already putting other trades in, and they're just collecting money as they go. And they're able to literally do twice as much or 3 times as much as they do in their regular job, because their job doesn't pay you 30% of your paycheck every such and such month. So it's a great tool for people that have a full-time job and want additional income. I can't tell you how many times or how many people I've talked to already in this chat room that are already doing that. They have jobs in different companies and different positions from all sorts of places you can imagine. And they love doing these trades with Nick. So Nick will help them create those trades. And then if they need to manage the trade, all it takes is for you to pop into this chat room for literally less than a couple of minutes, so that Nick responds to you, unless he's like, already responding to someone else, and he'll get to you after. And then you get your immediate update right away. So if let's say for any reason, maybe you can't do it during the week for any reason, you'll pop in Sunday. Okay, we have the member meetings on Sundays, and those are for about 2 to 3 hours. You put in your tickers, you put in your comments. I see several people say, hey, Nick, I have a credit put spread on this stock. I'm up such and such. Should I wait for these period, or should I close it now in this case? And then, they put other stocks. They put several stocks that they want Nick to look at. Like, hey, Nick, I'm trying to move a credit put spread here for 3-4 months out. What levels should I be looking at? What's the setup I should be looking at? So this works for all sorts of traders. I know, because I do both sorts of trades, and I have a full-time job, and I have other stuff that I'm telling you, there's, times really, you can find time. You can find time. If it involves money, I promise you, you will be able to find time. And this is really what this is for. Now, keep in mind, there's a lot of education as well. It's not just about making money and all that stuff and not losing money, but it's also about learning what happened, how you did that, and how you can replicate that process, right? Creating consistency in your trading, and not just getting lucky, by following or trading whatever's trending on StockTwits, or whatever people are talking about on Wall Street Bets. I'm talking about trading with a strategy, a plan, and something that you can actually fall back on, right? And at the same time, with Nick, be able to hedge your trades as well, right? So that's why he's hedged on his trades. And for those that are trying to learn, this is the place for you. But if you're trying to make money, more importantly, and also learn, I don't think there's a better place for you specifically. So I'll put the contact if you guys want to send an email. Keep in mind, it is Memorial Day. We are closed. We weren't going to do this session today, but several members emailed me and they said they wanted, see if we could go out, because even though the market's closed, we all want to know how to get ready for tomorrow, right? When we start trading in the chat room. So we did this because the Inner Circle members sent me an email requesting it. So I wasn't going to let you guys down. I came out here with Nick, even though it wasn't for, we weren't here for 4 hours, like maybe sometimes we are, but just send an email if you have questions. And all right, cool stuff. All right, folks. So that does it for me here. I'm going to go ahead and I got some stuff I got to work on here. And then I really think you guys should give this a try. There's a 7-day money back guarantee. There's really no reason why you're not in this chat room right now and giving these 7 days a chance, right? Because at the end of the day, there's a lot more than trades there. There's education, camaraderie, a great community, trade ideas, a whole lot of stuff there that you'll be doing with Nick. And if you think about it, you get like 60 hours plus around there or more from Nick, so keep in mind, that's a week. That's a week. There are people that are going to charge you $20,000 for that kind of time. So take advantage of it. And I hope you guys have a great weekend. Make sure you stay safe. Enjoy your Memorial Day. And anything else that you guys need, send an email. Gvon, I put the link in the chat. It's 70% off until midnight. And if you have questions, just send an email. That probably would be the best thing for today. You're welcome, brother. No worries. All right, folks, have a great day. We'll see you next time. And I'll see some of you guys in the chat room tomorrow so we can pick up with the trading where we left off Friday. All right, folks.
tell you